Good morning and welcome this morning to Trading Futures. There's the opening bell. This is going to be another great webcast here from Schwab Coaching. My name is Ben Watson. I'm an education coach here at Charles Schwab. I'm joined out there in the chat, as usual, by my good friend Mike Fairborn, 20-plus year veteran of the financial markets. And he's there to help facilitate the conversation, keep that chat flowing. So ask him some questions. If you're here in the recorded session, leave us a comment in the comment section, and we'll get back to you on that as quickly as we can. Thanks to all of you for being here. Kind of an interesting morning here this morning as we go into the kind of middle to end of this week, which sees potentially the resumption of some government data. It brings earnings to some of the big tech bellwethers, and we've got some changes going on in the crypto space. So we're going to talk about those here this morning as we get into this discussion. A couple of quick reminders, though, as we get started. Everything we talk about here in this discussion is simply for illustrative and educational purposes only, not any kind of a recommendation or advice. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to trading futures products. Also, as we get into this discussion, we're going to talk about today specifically some virtual currency derivatives. So remember that virtual currency derivatives involves unique and specific risks. Make sure that you read the NFA and the CFTC customer advisories about those products. Recognize that those virtual currency products are digital representations of value, functions as medium of exchange. They do not have legal tender status. And so there are some specific risks associated with that. We're going to be using the Thinkorswim desktop software platform today, specifically the paper money version. And again, properly warned you be. I just want to make sure that everybody's clear about this. The paper money platform of the Thinkorswim desktop software platform does not do certain things. It does not allow for the use of studies, either scripted or pre-built studies in scans in the paper money platform. And it doesn't facilitate the early assignment of short options when those options are American style. So just be aware that fills may also be a little bit different in the paper money platform than you might actually experience in a live trading environment. So let's pop over here to the Thinkorswim desktop software platform, see what's going on here really quickly, and take a look. And by the way, I just happened to notice out there in the chat, a couple of people making the comment that they got the pop-up flag on their Thinkorswim desktop software platform this morning or yesterday or over the weekend, saying that Windows 10 is no longer supported, and that is in fact the case. You can still log in. The official support for Windows 10 for the Thinkorswim platform has ended because Microsoft has ended their support of Windows 10, but you can still log in, but that is at your own risk, so be aware of that. Now, taking a look at MBT, this is, as we get started this morning, kind of where there's some epicenter of movement, and MBT /MBT is the micro contract, or excuse me, the mini contract for Bitcoin. And again, just quickly remember that disclaimer that I gave you in the beginning about virtual currency derivatives. And when we talk about these, recognize that there are some specific challenges or specific risks. So we're seeing kind of this psychological break. We talked about this. I'm going to look at the left-hand side. I'm on my grid chart, my futures movers grid chart, which means that the left-hand side is a one-year daily chart. The right-hand side is a today 5-minute chart. So longer-term chart, intraday chart. So we're going to focus first of all on the longer-term chart and kind of see what's going on here. So remember that this is reflective of the larger contract. If we were going to look at the larger contract, it would be /BTC. This is the Bitcoin futures contract. And you can see the notional value here, 461,000, 462,000. Tick size is 5, tick value is 25, point value is 5. So when this moves, that's going to move in 5-point increment, or in 5 increments of 5. And each time that ticks, that's $25. And each point that changes, so the next move there is going to be a $5 point change. So $5 times 92,080 gives us our notional value here in this particular case. All All right, so I'm just going to remove that. There you go. All right, so let's take a look here at what's going on. We're seeing kind of this break below this support level. And we had talked about this kind of expansion pattern technically over the last little while. And so this is playing itself out in /BTC and /MBT and also in the micro as well. So as we start seeing this break, we see a break below that diagonal extension line of this expansion pattern. Expansion patterns tend to be exhaustive, especially to the bulls. And when we start to see the breakdown beginning to happen, really is the failure of this price on BTC to break back up above kind of the midpoint of this expansion pattern. So from that standpoint, as you get to this level, that was kind of the beginning of this downward move. Now, where does this downward move stop? That becomes the next question. There is some structural support back down here around the 76 or 77 time frame or price level here. You've got some support right about where it is. That was support back here in the February-March timeframe, and into April was resistance. So that could be a potential stopping point for Bitcoin to perhaps bounce. So the question was asked in the chat, do these trade after hours? And the answer is absolutely yes. So these futures contracts, again, are going to trade outside. And that's one of the benefits. So sometimes people will ask the question, well, why do I want to trade a futures contract? And one of the benefits of trading a futures contract, potentially, it can also be a drawback, is that these futures contracts trade generally 24/6 or 24/6 and a half, roughly. So you have a small time period usually on Sundays when those are closed for settlement and maintenance. But generally, that is one of the benefits for some traders to be able to trade in those timeframes outside of regular cash market hours. And so that's why we oftentimes will look at those intraday charts as well. But starting to see this little bit of a bounce here today. So we saw a little bit of a push to the downside and a little bit of a bounce. So what I'm going to do now is I'm going to come back to /MBT, which is the micro Bitcoin futures contract. We also have a smaller contract as well. And if you go here to the drop down and you go to the futures, you're going to see that, let's see, let's see. Nope, that is the smallest, the contracts. I was thinking of the other ones. So there's MBT /MBT right there. Initial margin on this is going to be $2,431, which is going to be a percentage of that notional value of the contract. And you can see that tick size is 5, tick value is 50 cents instead of $25, point value is 10 cents. And so 10 cents times that gives us our notional value of 9,252. And so we're seeing that little bit of a bounce here. Now let's move over to our intraday chart. And this has gone exactly the opposite direction that I was looking at. The way that I was setting this trade up prior to the open was on the big downward push in momentum here, looking for this to break this support level that it had kind of been channeling in between. So down here, right around that 9,000 or 90,965, looking for a continued move to the downside. So here's how I was labeling this. This would have been our entry. So I'll put an E there. This would have been the stop. And this would have been the target down here, looking for that move down to that next level, or what created that low in that daily candle, kind of that move to the downside. We see that intraday time frame giving us that low down here. So looking at trading simply to the downside here in this particular case. But in fact, there seems to be a little bit of dip buying going on here in Bitcoin as it breaks out of this resistance level. So not to be undone here and not to be daunted by this, because one of the characteristics about a futures contract is that we can go long the futures contract and trade this in a bullish direction. We could go short the futures contract and trade this in a bearish direction. And since we really haven't, so what I've got on here in the trade that I put together was a sell stop entry into this trade going short the /MBT at the 90,975 level. That was their sell stop. So it says stop, wait, don't do anything until price breaks 90,975, then sell the contract and push that to the downside and look for that downside movement. And then put a stop in if the price goes up. So we would have a buy stop order. And that buy stop order was right here, making this a market order. Remember that when we use stops with a futures contract, that stop actually, if it triggers a market order, generally gets worked as an exchange designated limit order. So this buy stop to close that trade out isn't going to guarantee the exact price at which we would have gotten out of the trade. It simply would have specified the point at which that trade activated. And then our our buy limit order would have said buy it at this price or less. Still doesn't guarantee the price at which that order gets filled, because it could go down even further, which would be beneficial to us in that particular case because we were going short the contract. But the primary order, the order to go short, we go back to that chart, and the initial condition for setting this up has kind of now been invalidated. Now, it doesn't mean that this won't move back in the opposite direction and continue to move to the downside. So one of the things that we could consider doing, and this is again kind of almost a trader's choice if you want to think about it, right? From a trend direction standpoint. If we were of that buy the dip mentality, we might be looking, again, as we come off of this longer term chart, looking for a bounce there, but without confirmation. So you're not seeing a lot of upside pressure on the CCI. You're not seeing a lot of confirmation there. We don't have a close above the high of the low day type of validation here off of that support level. So that buy the dip mentality here, that breakout and that pullback, one of the things that we may think about as we're looking at this here with a pretty strong spike to the upside in momentum is if we kind of activate this drawing and we kind of take this out a little bit. And remember, these are just discretionarily drawn. There's no structural level other than the fact that prices change direction near this level a couple of times. But my thought in this, and I know Mike talks a little bit about this in terms of swing trading. He teaches the swing trading webcast, and I think that's on Mondays. But if we get a bounce off of this level of support, so we got the kind of little bit of an excursion. It came back down. This was where I was looking at entering the trade. It didn't enter the trade at that point. It rallied back up. It broke out of the resistance level. In fact, going in the opposite direction from what I was expecting it to do. And it's now coming back down to the downside and finding that level of support. So here's my thought process, right? Here is my thought process. That if we were to look at this and say, okay, we get a bounce, a confirmed bounce up off of that support level, kind of a retest of that breakout. So breakout, pullback, retest, bounce, then that might be a reason to go long in this particular case, right? Long this contract and look for this to move back to the upside with that dip buying going on with some pretty strong momentum. If, on the other hand, we get a breakdown back into this channel, and this is just an excursion, which we're starting to see right now, but the candle hasn't closed yet. If this is just an excursion outside the range of this channel, and then it comes back in and it starts moving towards this downside, then I'm going to leave that original trade setup on and look to trade this to the downside, because this may very well be kind of that buy the dip activity that's going on, and we're not getting confirmation of the breakout, at least not yet. So we're going to keep this one in place at the moment because it's breaking through that level of support. Had we gotten this bounce, had it held that level, we may still get this bounce because, remember, we gotta pay attention to the fact that these levels of support and resistance are areas and not bright lines on the chart. So this might very well be just as valid an entry signal or a confirmation here. And we're starting to get some buying going on there as this moves quickly back to the upside. So we can put this trade together and kind of look at this from that other perspective. So I'm going to look at this from that standpoint of saying, okay, we could go, we could take this in an upward direction. Now, conceivably, I just want to say this, conceivably, we could set this trade up so that it would be an OCO that would then trigger these secondary orders to get into the trade, right? So that it was, if it goes up, then enter the trade long, or if it goes down, then enter the trade short. But for simplicity's sake, I'm going to wait to see if we get a break back up above these candles right here. And if we get a break up above these candles right here, then what I'm going to do is I'm going to take that order to go short off, and I'm going to create an order to go long in this particular case, just for simplicity's sake. Because I will tell you this, and especially when it comes to building complex orders that have OCO brackets, when you start nesting an order, and when you start nesting these orders, and it's not a function necessarily of the complexity in the Thinkorswim platform, it's just from a trade logic standpoint. So if you've got the price of the stock sitting at this particular point, and you've got kind of this binary scenario, so this is if it goes up or if it goes down, then you create this, this OCO bracket. That's OCO. OCO bracket or OCO to the downside. And you've got these kind of nested or branching logic orders. That becomes very complex to keep in mind, right? And I'm a big, especially when it comes to trading futures contracts, a big fan of simplicity in terms of the order creation, because when you start nesting these orders or branching these orders, there becomes, you let in more opportunity for mistakes to be made. So just kind of keep that in mind. And again, you can do, I'm not making recommendations. I'm just saying that it is something to consider and kind of keeping those orders simple. So what I am going to do is I'm going to put an alert here. We're going to create an alert at that level. And that alert is going to say, all right, if /MBT crosses back up above that 92,235 level, then let us know. Ring a bell, send me a text, and we're going to create that alert. Now, this is kind of the expectation for an alert. We expect that it's going to let us know, but it doesn't guarantee that it's going to let us know, and we might not get that alert, and we might not. So relying on an alert to do something is, there's a reason why if you look at my alarm screen on my phone, I have like 5 a.m., 5:10 a.m., 5:15 a.m., just because, I want to be sure. So something to pay attention to. Alerts don't guarantee that you're actually going to get the message, so don't necessarily rely on those. So we're going to watch that, and we're going to see. So let's do this. Let's pop back over here to our futures grid, and let's take a look at what's going on in the broad market at this particular point. So here's the /ES, and we can see that these are daily candles, /ES, continuing this downward movement that we've seen really over the last 3 days, not making that move to the downside, or not really making that move kind of as a big move to the downside. This is a little bit more of another kind of spinning top candle here. And we look at the NASDAQ a little bit stronger move to the downside, but right back down into some levels of support, but breaking the 50-period simple moving average in this case. And the Russell 2000 had broken that 50-period moving average about a week ago, now starting to see maybe a little bit of a bounce here up off of that bottom. But the RSI still making that move to the downside. So yes, there is some downward, and that's exactly what I do too. Echo Casper, is I hit the snooze button. But starting to see maybe a little bit of a bounce here and a little bit of a turnaround. So once again, kind of that perspective. If we were to take this down in the /RTY, which is the Russell 2000 futures contract, take this down to that 5-day, 5-minute chart, and we're kind of seeing a very similar pattern here on this right-hand side to what we were seeing on the Bitcoin chart, is that it had started to make that move to the downside. We start to see it rally back up, and now it's kind of waffling around here, kind of above that resistance level. So, that's a lower high and a lower low for sure on the longer term chart. So let's go back to that 1-year daily chart. There's the lower high, there's the low, there's a lower high, there's a lower low. So the Russell 2000, I think you could argue in this particular case, this futures contract has broken into a short to intermediate term downtrend. Now, whether it stays in that downtrend becomes a function of what does it do at this resistance. If it comes back up to that resistance and fails there and continues to move to the downside, starting to see that downward push. So that could continue to move a little bit lower, maybe down to that 200-period moving average, which is starting to flatten out a little bit. The 50 is starting to roll over. So starting to see some structural weakness here playing itself out in the Russell 2000. I want to pop back over to that futures movers grid again, because I want to kind of look at a couple of other, let's put this back on the side by side. And I wanted to look at a couple of other futures contracts here, /CL. This is crude oil. And I want to see what crude oil is doing here at this particular point after the issues that are going on in the Russian oil docks and things, whether or not that is pushing price to the downside. And we're kind of seeing oil cruising under that $60 level, which has been, if we look at where 60 is, it's right about there. That's kind of been the cusp of this downward movement in crude. If we kind of draw that line down here, that $60 mark has been kind of that last little break to the upside. Psychologically, that's a big round number, and we're seeing a little bit of a bounce below that. Here's 60 acting potentially as that big round number, kind of that resistance area. We see it touch it, break out, and then break back down below, and starting to see that extension to the downside, and starting to see some increasing downward momentum here. So this is kind of the, if you want to think about it, this is maybe the demand issue coming into play here. You know, we're a week out from Thanksgiving, and typically that's a period of time where gasoline and oil demand starts to increase as the weather gets a little bit worse. You start to see heating oil demand picking up, which creates increasing demand. We're starting to see this little bit of a squeeze in the crude oil contract. So maybe seeing that move to the downside is not outside the realm of possibility here. Let's pop over here to the right-hand side a little bit. Let's maximize this right-hand side sell. And I'm just going to kind of squish this down and say, hey, look, where might this move? And this might be an opportunity to perhaps put a Fibonacci into place. So I'm going to grab my Fibonacci tool. And I'm going to draw this. I'm going to draw this the way that I normally draw this, and then we're going to talk through this. So if I draw my Fibonacci's from that move to right up here, oh, that's my regression line. Sorry, grabbed the wrong one. Let's go back here. There we go. Fibonacci retracements. We'll go down here to the low, and we'll draw up here. And this is the way that some people draw those Fibonacci retracements, looking at how far it's come back down. Oftentimes what I'll do is I will draw from the top of the move back down to the bottom of the move if I'm looking bullishly. But you can see where this has gone to. So if this is the whole move that the market made, that whatever this instrument is made from 0 to 100, and that's where it starts to reverse. Now starting to see this move back down to the downside, we're right at that 23.6, which means that there's probably a pretty good likelihood that this makes the move down to this support level. The fact that it didn't bounce at the 50% level, it didn't bounce here at 38.2, although it did find some support, and it seems to be breaking this level, suggests that there is possibility of a move down here. So now what I'm going to do is I'm going to remove that drawing, and I'm going to draw from the bottom back to the top, and I'm going to squish this down and say, how far down might this continue to move if we were looking at Fibonacci extensions to the downside? And that Fibonacci extension to the downside would put this perhaps down around, yeah, and so that's, Rita, that's exactly what I'm doing. You see the same level, right? But this is the 78.6 level. I drew the same move, covered the same move, just drawing from top to bottom or bottom to top. And so my extension now goes down to the downside. So that extension move would be down here at about the 58.78 level, $58.78 a barrel. So what I'm going to do is let's pop over here really quick, and then we'll pop over to those metals. But if I look at /CL under the futures contract, look at my initial margin, 4,824 on the big contract. So if I were to change that to /MCL, now that initial margin drops to 485, to a tenth of that. And so I'm going to look at trading this using the smaller contract. Even though we're getting that little bit of a bounce here, I'm going to look at this and trading that smaller contract. So we're going to click on /MCL, same kind of thing. And we said, all right, we can do the same type of extension, come back up here, and we'll look at where that extension level is, 58, we'll call it 58.77. So what I'm going to look for is a break of this 78.6 level. So we're going to right click right here, 59.45. We're going to create a sell custom with OCO bracket. So we're going to use that 59.45 as our entry. So this is going to have to be a sell stop because we're going short, and we don't want it to trigger until it breaks that level. We want that confirmation. So I'm going to make that a sell stop at 59.45, and I'm going to make my target to buy this back a buy limit at 58.77. So we'll make that 58.77 to the downside, and we'll make that good till canceled. If I were to just leave it at that, right? If I were to just leave it at that, if I put in a limit order, it says when I'm buying something, whether I'm buying it to open or buying it to close, a limit order says that price or better. So buying something at a limit price says buy it at that price or lower. And then I'm going to make my stop. Let's kind of zoom back in here really quick. I'm going to make my stop if this moves back up above that 50% level on the chart. So I'm going to give myself a little bit of room to the upside for this to fail. So that's 59, we'll call it 59.70. So I'll bring my order entry up here really quick, and we're going to say, all right, fine, let's buy this on a buy stop at 59.70 and make that good till canceled. Now we've got our OCO bracket order in place. We're going to go ahead and click on confirm and send, and we're going to read through this order. Sell one contract of the MCL contract, the /MCL, at a sell stop 59.45 to open. Then if it goes up, we're going to buy it back at 59.70, or we're going to buy it back at 58.77. Those are our two OCOs. Read through the order, make sure we're aware of the transaction costs. We know what our initial margin is, $485. We're going to put this in our futures group. we're going to click on send, and we're going to fire that order off and look for that move to make that move to the downside, and look for this to continue to move down to that Fibonacci extension. And you can see the momentum is still continuing to kind of increase to the downside over these last couple of candles. We're starting to see that MACD momentum push a little bit lower, not to the lowest that it was, but it's not moving towards the green line very much, towards the zero line. We're still getting some downward momentum here in the /MCL contract. So let's take a look at a couple of others. I want to just pop back really quick and see /MBT, where our Bitcoin trade is sitting at the moment. We haven't gotten the alert yet. It didn't go back up. It's kind of sitting right in the middle. We still have our downside trade set up so that it'll enter if it goes below that 90,958 level. That's going to be our trigger to the downside. And we can see that that MACD momentum is moving to the downside. So let's take a look at a couple of other contracts here. I'm going to put this back in the side-by-side group, or side-by-side view. By the way, I'm going to do this again. I'm going to click on Share Grid. And this is in the description page for this, or the description notes for this webcast, but I'm going to put it out here as well. And anytime we share anything, whether it's a grid or a study or a chart or anything else, it is not guaranteed for timer accuracy, and it is simply for illustrative and educational purposes only. So there you go. You've got that side-by-side grid chart. All right, our crude oil contract filled. Let's go back to that really quickly and let's see what's going on. /MCL is our crude contract, and it kind of blipped below our entry line. Our entry line was right here, and our exit is if it goes down to here, or if it goes up above the 50% level at 59.70. That's our exit on a stop, or on a buy stop. Our exit on a buy limit is down here at 58.77. So, all right. All right, so that's now in place and that's working. So we'll watch that and see what that trade does if it continues to move to the downside. So let's pop back over here. I know that we had some ideas in taking a look at, say, for instance, what gold is doing. And here is gold. And gold on the longer term chart, we kind of zoom in here, you can kind of see a little bit of a squeeze going on in gold. So there's that diagonal trend line. Here's the diagonal trend line coming down. It's getting into kind of this relatively obtuse triangle, maybe bouncing up off of that level of support here. And we had seen some pressure overnight in gold back down to that diagonal support level. That's the bottom of that candle, right around the 4,000 level. It then rallied pretty strongly off of that level up to about 40.80, now coming back down. So there is the potential for this to make that move and continue back down to that diagonal trend line on the upside. Let's take a look at /SI. Take a look at /silver futures, the big contract here. And silver doing just about the same thing. You can kind of see maybe a little bit more of a double top type of formation here with some resistance up around this area and perhaps a little bit of a support level here. And I would argue that maybe, this becomes perhaps a more defined pattern from a technical analysis standpoint for a longer term trend trade, because this double top here could impart kind of a directional projection. Again, we'll just duplicate that line and project that to the downside. And we would argue then that there might be some support down here at around the 39 half level. We'll zoom back out a little bit and see if that becomes a level of support. So that might be what some traders are looking for in this particular case, that move possibly to the downside. A couple of people asking the question, what about the VIX /VX and why the VIX spike? So seeing the VIX itself, the VIX index, moving significantly higher here in the last couple of days. We see that big spike in the VIX. back up. I mean, quite frankly, that's a pretty substantial spike, and we can see that on the intraday chart if we move over to the right-hand side. The thing about VIX is that it tends, obviously, to be very reactionary, number one. And number two, it tends not to stay up at those levels. Whoops, that's not my line tool, that's my fibs. Tends not to stay up at these levels for very long. Now, that does not mean that it can't go higher. But what we could look at doing here in this particular case, yeah, with the Dow down, the NASDAQ down, we're ahead of the NVIDIA earnings. We've got a Cloudflare outage, to be honest, that might be creating a little bit of volatility here as well. So we could look at perhaps fading this rally a little bit on the VIX chart in these VIX futures. So let's look at doing that. I'm going to maximize this grid right here. And again, remember, when we're doing this, the VIX is in and of itself. The VIX index is not a tradable instrument. The VIX futures are a tradable instrument. VIX options are tradable instruments. But the VIX index itself is a reflection of implied volatility across SPX options at the in the money, at the money, and out of the money positions over a 30-day average. So this is a little bit, trading VIX futures on the movement of the VIX relative to what's going on with the SPX is a little bit like, I've said this before, this is a little bit like a seal balanced on a beach ball, which is placed on one of those balance boards while the seal is balancing a beach ball on his nose, and we're trying to predict the movement of the beach ball on his nose. So there's kind of a disconnect between all of these, although they move, in some sort of correlation. But we're starting to see that move to the downside. So what I'm going to look for in entering this trade and trading this back and fading this direction is I'm going to look at selling this and maybe looking at taking it off if it breaks down below this 23.25, kind of below that, what was a support level, and taking it off if it goes back up above 25. So what we're going to do is we're going to go right here, right click, sell custom with OCO bracket. So my sell, we're going to do that on a limit. Again, that's going to get worked as a market order. And in a fast moving market, we could get gapped around on that order. But we're going to look at taking this trade off on a buy stop at 25. We'll call it 25 even. And we're going to make that good till canceled. We're going to look at buying this on a buy limit if it goes below 23.27. And we're going to open that limit up. We're currently sitting at 24.35. So I'm going to sell this for 24.30 or better. And if we can get better than that, we will. We're going to go ahead. Oh, we got to make that good till canceled as well so that we're all in the same group. Let's take a look at confirm and send. Read through this. We're going to sell it at 24.30 or better. 24.42, where it is right now, is better than 24.30. Then buy it back at a stop, at a buy stop of 25 if it goes against us. Buy it back at 23.27 if it goes in our favor. There's our transaction costs, our initial margin here in that trade. We're still 24.30. We're at 24.25. 24.30. Let's click on send and let's see if this order fills for us. And we got it at 24.35 and seeing that move to the downside. So in this particular case, we're looking at just fading this rally and looking for this to move to the downside. So let me just label this really quickly. So here's our target. And here's our exit. 25. That's what, whoops. Right click, edit. And we'll do that as our stop. So we just are consistent with that. So our stop is there, our target is there, and we're into the trade and trading against that move, fading that rally. But the reason we're fading the rally is because we know that generally VIX spikes don't last for long and they tend to bleed off very quickly. The VIX is a mean reverting instrument. That does not, however, mean that it can't go higher from here. And it's in fact going in the direction that we want it to go at the moment. no guarantee that it won't turn and go the other direction. So let's take a look at our futures group and see what we've got in here. So we're not in that /MBT trade yet. We put this in unallocated. Let's move that to our group futures right there so that those are all in the same place. So we're short /MCL, looking at trading crude oil to the downside. And that's kind of working back against us just a little bit. But our /VX trade, trading that, fading that rally, is working in our favor at this particular point. And so, Carol, if the indexes start to recover, what's that going to do to VIX? That is going to make that move perhaps in the VIX back down to the downside a little more sharp. And we may see that bleed off a little more quickly, although it's not doing it in this next candle. So we'll see what happens there. Listen, if you guys want to see more information about this, let me pop over here really quickly. I just wanted to show that. Let me just bring up my charts here real quick. Let's pop over here to Trader Talks. Let me bring that up so that we can see it. If you want to learn more about trading futures, pop over here to the Trader Talks webcast page at youtube.com/@Trader Talks webcast. By all means, click on subscribe if you have not done so already, and then type in, say, for instance, Fibonacci. And you're going to see a bunch of webcasts that talk about Fibonacci's and using Fibonacci's. There's, in fact, Mike Fairborn just a couple of months ago talking about swing direction targets with Fibonacci retracements and extensions. So explaining how we draw those lines. Ken Rose talked about it. Cameron Mays talked about it. Connie's talked about it, using Fibonacci lines to the upside or downside. All right. So yeah, it is definitely moving around. Let's pop back over here and see where that is headed. So we've got our stop in place up here at 25. We've got our target down here at that support level. And let's take a look really quickly, because I know that there's some uncertainty, as is evidenced by the VIX. So /ES down now about 1.13% on the futures contract. The /NQ seeing that little bit of a downward movement at 1.63% to the downside. And the Russell 2000 kind of losing a little bit of that recovery steam on that bounce, down about 0.65% here this morning. So my thanks to Michael Fairborn for helping out. Remember, you can follow us on X at Ben Watson CS, at Mike Fairborn CS, and you can follow me on LinkedIn now as well. Check out my X profile for my LinkedIn profile information as well. Guys, have a great day. Go out there. It's going to be an interesting one for sure. And I think into the end of the week, it's certainly going to be a volatile, at least what it looks like now. It doesn't mean that it'll stay that way, but it could be a volatile week. Guys, have a great day. We'll see you soon. Take care. Bye-bye.